tonight. All right. Just so you know, this is a recording for my Wednesday session. This is Steve Morrow, June 2022. All right, let's do this. So I want to welcome my new guys in. If you're in here, congratulations. Happy to have you aboard. If you need anything, write to support or me directly, steve@beatthemarketmaker.com. All right, man, it's going fast. We know these 2 months are gone. We know this is gone. And we know we're sitting right here. Okay, so what are you going to do? Well, we're closing the quarter, right? If you know, this is the second quarter, third month, finishes it. We're going to be in quarter 3 in about 3 weeks. We're heading into a holiday, right? 4th of July is going to be on the following Monday. So most people go on vacation with their families. Most people take off and come back Tuesday. However you handle it is fine, but just count that in for your 12-week cycle. Either start the following week, reset, or if you're struggling and you didn't have a good quarter, take these 3 weeks, use them as negative space, and do -3, 2, 1, right? And then start 0 and then start over there. Second week of July or midweek of July, which would be like July 6th or so. All right, so that's it, man. We're going into quarter 3. That means that half the year is down and half the year is in front of you. So you're at the 50-50 or the 50% retracement mark in your career right now. You have to figure out how to get your processes developed, do some planning, map some stuff out, get it to me. All right, it's the same thing, man. It's part of the process, right? You got to have a process for getting in the office. You got to have a process to take care of yourself. I mean, process, routine, whatever you want to call it. Some people get up every day, they go for a 30-minute walk, they eat a certain food. That's their process, right? To get their day started. You need a process to get your trading day started and to come in and be professional and have an idea of what the check down is supposed to be and what it's supposed to look like. And we're going to talk about that. We're going to check through some charts. But everything that we do is based on this 12-week year, right? So always try to be improving yourself, right? If you want to lose that 5 pounds, do something about it. Make a plan. If you want to take more trades, figure out a way to execute more sharply, add a session, add time. There's some way that you can make this work for you. No matter what you're doing, if you're currently employed, you could trade larger time frames. I know a guy that trades 1-hour charts. He's in the group. I didn't ask his permission to say his name, so I won't, but he trades 1-hour charts from his phone. Like, he'll do his check down before he goes to work, get an idea where he wants the deal from, and then he'll keep an eye on his phone and he'll execute. That's okay, man. Whatever it takes, right? The idea is for him to execute clearly enough and precisely enough to be able to leave his job in 6 to 12 months. I think the biggest problem in this entire business is patience, right? You have to have self-control. You have to exercise self-discipline, because you could easily sign up, watch 1 or 2 of my videos, throw some money in an account, and then blow it, and then curse me out under your breath, right? The idea is to develop a plan over 12 weeks, put it into motion over the next 12 weeks, refine it, and maybe over the next 12 weeks. You guys hate that. You don't want to hear it. But if you're still spinning your wheels after 6 months, here we are, we're in June. And June's 3 weeks removed to be in July, right? It's almost over. Then you're 6 months down, 6 months forward. So what did you do with the last 6 months? Did you meet your expectations? Are you monitoring yourself? Right, that's the stuff, right? Using the qualifying account. I know they give like free demos for the rules. So you know what? Maybe you don't even want to do that, but that would give you accountability to yourself. You can't lie if you get kicked out of their qualifying account 3 times in a row. You can't bullshit yourself. You're not ready. Right? And I know some of the rules are weird. I've been looking over them with some people have asked me what happened and stuff that they did. I think they don't mark the trading day correctly. It's a little different. That's a little nuance. I think it's midnight to midnight. So if you get stopped out in the early morning hours going into London, then you get back up and want to trade Asia and it's not midnight yet and you have a problem, you get stopped out, then that counts as the full 24-hour cycle, and you're kicked out of the system, or you get a fail. Anyway, the bottom line is you got to develop some rules and adhere to them and hold yourself accountable. And that's what projecting and planning does using 12-week structure. Right? So talking about stuff, we were talking about aggregate entry to give yourself a little bit more accuracy, and that'll develop over time as you aggregate into orders. And I don't think I got to the box part yet. I laid out how it should be. A couple of orders, break up the pieces, and don't get carried away. Counts as one order, right? So if you're trading pound dollar or euro dollar, we know that the box in some cases can get really tight. It does in the futures contracts. It's a little bigger in the actual Forex instrument. So depending on the amount of orders you want to put in, right? If you want to use 2 orders or 3 order aggregate, that's okay. And we're talking about weighting them, right? The lighter orders at the first part of the box, and then it gets higher towards the bottom. So the entry is weighted towards the lower side of the box, maybe the lower 1/3, right? So put an order. Front of the box should be the smallest order. Let's just say 1 lot. Mid box around the water, you would put double the size of the first order, but leaving enough room to double or even triple the third order if you're going to use 3 orders, right? Never deal on top of your own orders. At least use the spread spacing, right? Spread spacing, if you got a 2 or 3 pip spread, at least space by that much, right? And the idea of the whole concept is to be weighted lower or higher. If you're selling, weighted higher. If you're buying, weighted lower, right? So in this example, if you took this trade on the second leg, you want to weight into the bar. And I want you to notice the POC where they put the brakes on is always about mid-wick or towards the bottom, 1/3 to half of the entire wick, 1/3, 2/3 above, 1/3 towards the bottom, because that order block is used, this order block of orders in that wick, right, is used to absorb and stop. So they're hitting stops of anybody at higher price, and they throw the point of control, which is the highest amount of volume on there, but then there's bleed. There's always bleed. When they put a big level of orders, price always bleeds because you have to account for the spread. That's 1 pip right off the bat, depending on where you're doing business at. And then you have to count for just a little drift from some other orders that are here, or they don't get the stopping ability as hard as they want. So if you were going to aggregate, you would aggregate front of the box, right, middle of the box, and bottom of the box. And stop loss will be below here, some number, or depending on your risk tolerance and how you space it out, your stop loss could be below the swing low. Then obviously you get a nice move, taps back, and it's gone. See, this is an example where you got some bleed. So if you went right on the water, right, your first order on the water, second order middle of the box, third order back of the box, you got some bleed, and you picked up all 3 orders. This one, if you were doing the same layout, you might not get filled on order 3, the heavy weighted order at the bottom, and you would have a 1, 2, and third order would be missed. And that's annoying, man. So the idea is to get the whole position on. So you would either wait for a possible retest and deal again, or you would try to get it on while price was moving away. And that's the worst, because now you have your weighted order here. You inverted the pyramid for weighted orders, and that's problematic, man. All right, so same type of thing. Pattern, right? Shoulder, head, shoulder. You're looking to deal, and you're looking to refine your entry off of wicks and aggregate over the bodies, stretch it out, and then you can go limit order, aggregate it over the box as a grid. Just like that, stop loss down here. Let me be clear with that. Same thing here. Front of the box, right around the water. Middle of the box, bottom of the box, stop loss. Okay, the idea is to get the stop loss as far away from the edge of the box for bleed, but get all your orders picked up and have a heavy weighted order at the bottom. I know it's a tall order to get, pun intended, right? In this instance, you may or may not get filled here. So another idea is to slightly front run the box by a couple of pips. The box is very narrow. If the box is 5 or 6 pips, front run the box by a pip or two, then go mid and bottom, space it out. So you know you'd get this order on, and if it wicks in, you'd pick up at least the second order. And if it bleeds, you get all 3 orders. Just think about it and figure out what works best for you. But the idea is to space it out in a tight range and be weighted at the bottom. Right? And you'll notice this if you start. The order coming off of the first low of the day structure usually doesn't bleed because it's blocked, right? They block this, remember? They block that area. But the second push through usually bleeds. Okay, so you would box off of this area, like here, and then you get a bleed. So you can almost account for that. And it's around 2 to 3 pips plus the spread. Whatever the number is when you do homework, just keep in mind, if you're dealing it, add the spread. And depends on your broker. It could be a 3 or 4 pip spread, could be a 5 pip spread. Depends on the pair, depends on the broker, right? So if you know the edge is going to get expanded, then you could account for that in the box. You could draw the box and you can add 2 pips for the spread, 3 pips for the spread, and then you would have a bigger box to work from. Then you can front run it, mid run it, and then put it towards the low. And if you're getting enough of these orders that aren't getting filled, then you want to raise it up. They're using the spread to hold you out of getting in, okay? There's ways to work around this stuff. You just have to do the work, man. If you mark enough of these, you'll figure it out. I promise. You'll figure out what works best for you. But if you want to start getting size on, you probably need to aggregate it open. Especially if you're trading a combine, you want to get 50 lots off, you need to aggregate it. You could do 5 blocks of 10 or 225s. Or you could do a 10 for the front run and then pair of 20s. Just use your head, think, do some math, break it up. But the biggest problem with this whole thing, all of it, is getting the 10 on and the 20 on, right? And working 30 lots through, and then you get stopped out for the full 50 if you're going the wrong way or get triggered. So you're only going to make profit on 30 lots, and then you're going to take the full boat loss for 50. All right, just keep it in mind. Okay. Work this for me. How do you aggregate in here? All right. First of all, tell me what you're looking at. Okay, here's the day open, rejects price, right? So technically, this is your AR range. It represses. There's your swings. You get a break below, right? Single-legged A-frame or V-frame in this case. Price rolls. There's your first rejection. You have a little pin here. You draw a box on this. Okay, you want to add the spread. Let's do that. Then we want to front run one order, mid run, end run. This order may or may not get filled. So you would adjust up, right, at the AR level. Notice what's going on in the background. You're in session, right? You're in gap time going into session. Second attempt in session, right? This is towards, right, cut the AR box, the Asian session or the shadow box. I can't remember the names of the boxes. All right, cut the shadow box in half, right? And know that closer to session open is going to repeat a level or move away, right? So cut the box in half, cut the time of the box exactly in half, and try to deal from second half of the box into the session. Try to get yourself positioned. This is okay to deal from here if you get a clean setup, but this is the lead in, right? This would be your lead in. You see what's going on. You got an outside bar, vector to the low, right? First leg stop hunt, pull back. You expect a second leg, but you get a failed sell auction into the low. You don't get it. You get a rejection. You get a nice rejection on price right there. Okay, telling you they don't want lower prices, right? Draw your line, that included in your box. You get a break above, they flip the book higher, right? Closing above, they take out the level and they come right back. There's your arch space in there, your finger fits in there, it's probably really great. Anytime you get this arch like that where your finger fits, the bigger the arch, the more likely the level to hold. You get these arches, right? This is tight and it still works out, but you're looking for these arches in there. Finger roll, whatever you want to call it. Your finger, your middle finger should fit right in there nicely. If it doesn't, you either got way too fat fingers or it's not a good setup. All right, so leading in, outside structure, right? This structure, this is all one structure. This engulfs the whole area. Okay, pulls back. Don't short this. We have a directional bias from other time frames we're bringing in. We'll talk about that. Price goes down. They say can't have it. Not happening. Pulls back, right? 3, 2, 1. 1, 2, 3. First push rejected. Second push holds, gets lower, closes, but comes right back out. Okay, you can deal from there. Failed sell auction to the downside, rejected higher. Failed sell auction to the downside. You could deal here or aggregate into the box, and there's your AR level right in the middle of the box. Try to notice what's going on in the background. That's what those markers are there for. You got an AR low, price goes below the AR traps and comes above. Get a nice move away, right? Then you can figure out, okay, where am I at? 3, 2, 1, 3, 2, maybe 1 in here. Can make that argument. So look, up 1, 2, 3, 1, 2, 3, reversal. 50% retracement coming out of the next level, right? This pulls back 50% of this leg, roughly, all of it. 50%. What's at the 50% retracement? Just happens to be the day open and the top where this flipped. All right, see that? Okay, so the argument can be made that this flipped above the AR range and they retraced and tapped back into the zone, right? You could draw a zone just like this off these. Here, clear it up. You could take this, stretch it out, encompass the day open. That would be your box. This breaks the level, right? Break above, pull back, retest it, higher price, 3, 2, 1, reversal, pull back. Don't sell that when your directional bias is upside. Box this in, deal from the second leg on the open. Right, this looks like it's going to be a bounce trade. It goes back above the 50 and the 200, then it breaks below and breaks higher. Refine the entry. You have a rough idea on the chart where it's going to go down, right? You're looking for this, flip off of here. So when you get this push in here, you refine this. That would be your 2 leg. Easy deal from here. You can just enter on the close, on the pop back open, or you can limit order into the box, right? And it breaks open, rolls over, takes off. All right, hope that helps. Okay, mark me one now. I have some lines on here. Pause the recording, mark it, and then turn it back on. I'm just going to keep working through. So I'll be quiet just for the recording's sake for 30 seconds. All right, hope you're back. Hope you did the exercise. Okay, so what'd you get? All right, we noticed that it's consolidating. They break above and then they chop. Okay, the first question you got to ask yourself, why is there a full session of consolidation after the AR? So basically 2 sessions of consolidation. What would be the reason for that? Just throw some ideas out. All right, handle the cross pairs. Accumulate for larger objectives. Okay, if they're going to make a big punishing move after 2 sessions, They want to make it worth their while, worth the investment. So they're collecting up orders during Asia, collecting up orders during London, and they're going to punish in the US. Right? So what do you expect? Stop, hunt, and reversal. Draw the consolidated area as a new AR zone. Adjust the shift. I'm going to show you what that looks like in the book. Right? And you can use advanced entry, man. If you know what's going to happen, use advanced order entry. You stop limit orders, sell stop, buy stop, or just plain limits. All right, so look. You have AR zone, right? They snatch it away, and now they're trading on top of the Asian range, right? They're dipping in there a little bit, hitting some stops maybe from here, giving promise to people that were trapped here and here on these swings, making them hold on, maybe make them average in. And then here you go again, the entire session. Okay, then what do you expect? Stop, hunt high, drop, retest, gone. There's your crossover. When they break below here, this is the new point. Don't necessarily have to break below here because they shifted and this was a full session. This is over. This is Asia. They broke higher. Now we're looking at London as the marker. London becomes the new AR session. So now what do we expect? Stop, hunt high, drop, right in the shadow box. Right? The action happened here, going into US. End the session, false move, open the session with the real move. All right, so let's see what this looks like in the book. All right, so they pressed, then they squeezed it tight, brought the range in. And then look right here, right? They got a mild level of orders built up. This is causing the pressing. Then they got their insurance, their spacing in there, and they're holding the press here hard. You can see the color's deep and it's starting to fade. They tapped into it, ate some of it. So what happens? We already know. Comes out, hits the top, comes through, works like that. So you don't need this tool. Just understand what's going on. They're consolidating. They shift it. They press the book tighter. And then they do exactly what you expect them to do. They hit the stops high, drop, and you could anticipate what it's going to look like in the chart. You could just imagine that it's going to go here like this, maybe wick through there a little bit, retest there, retest there, retest there, there, and then gone. Right? They always break a level and it sucks back into it. Break a level, sucks back into it. Right? This would give false hope to anybody that's long up here because it looks like it's going to come back. And it's just to break through a level and retest. They have to get through all this. You're going to get a pretty decent retest into that. It might even bleed all the way to the top where it was. All right, I hope that makes sense. That's what this looks like all the time. You don't need the tool because this is what it looks like. They press the level, squeeze it, bring these levels down, squeeze it tighter, and then they stop and it just opens right here. They just open the hole. So when they open the hole, it sucks this way and they leave that in place and then they move that or lift it when it gets to it. They start pressing it down. Every level gets filled in the book. Right, so it'll go up, it'll reject off of here, right? Price vacuums right through neutral space or black part of the book. Then it'll come back down, they'll start pressing the levels on it. Start pressing. Every time price goes down, they'll press it. Then it'll get through a major old level, hit it. This is your VWAP, it'll retest that. Right, this is your 50 EMA. It'll retest the 50. Almost always, it'll break through it and retest into it. Because people that are trading long are looking for a bounce this way or a retest of the 50 EMA, thinking higher price because it's trading above, but then they'll come through and retest and give you that false sense of security and then take the rug out from under you. It's just understanding the higher time frame directional bias. Right? Okay. So I hope that makes sense. We're going to talk about process stuff continued. I'm still getting some trickling emails in, and I'm trying to, like, I guess, to be fair, compile the best possible ones. So what we're going to do is we're going to go through kind of my process, but keeping in mind, like, other ideas that you might have from maybe Jim or Carr or how you want to look at it, and try to help you develop your own. That's the idea. Okay, I do it a little different than my counterparts, but I just want you to figure out what works for you. Okay, so checking the daily chart is optional, and for me, I don't really use it, and I'm going to explain to you why. If you're day trading, you're essentially trading inside the movement of the daily candle. Okay, so I'm looking for the ADR, which is formed by the daily candle, right? I'm using the boundaries of the blue tracer, which is in fact the markers for the daily candle. And I'm looking for highs and lows to lean against, or a pattern to develop, or both, right? If I have a blue tracer and I want to lean on that, a blue tracer high, if I have a blue tracer to the upside, that line right there in blue denotes to me where yesterday's candle was, right? This is the position of yesterday's blue candle. So if you have your two blue tracer lines, right? Let me label them BT, BTH, BT high, BT low. All right, so this to this is usually, or it was, ADR for that yesterday. So without looking at the daily chart, I already know what the candle did, right? I could tell you if it was a long bar. I could tell you if it was a spinning top or possibly a hammer, just by the way the tracers are. If the tracers are like this, right, and this is typical ADR, then you could pretty much surmise that it was probably, and depending on where price opened, right, where the open line is, if the open line is coming through Asia like this, you could surmise that price open, got rejected higher, got rejected lower, and made a very tight range, right? And especially if price shifted down the prior day, because the blue tracers will be like this, right? Stair step, and this one will be flat. So just the blue tracers is enough for me. Doesn't have to be for everybody. You could look at the color of it to get a close idea if it was a red close or a green close, right? Green close, higher price, red close, lower price. But if you got some type of doji or spinning top rather, if you got a hammer, right, that's telling downside. It's up to you if you want to track that. I personally don't use it because I'm looking at the markers on the chart, right? The idea for me when we started talking about this, I don't know, 12 years ago, 15 years ago, I don't even know, is to pull the stuff that's useful onto the time frame you're using, right? That's why we have these different color moving averages, right? Higher time frame, current time frame, price action, right? Whatever chart you're trading on, the mayonnaise or white line denotes the next higher time frame. The blue line, water, denotes the directional bias on that chart, right? It's the volume weighted moving average essentially for what's going on currently in the day, right? Weighted, price is higher. Weighted, price is lower. Okay, I hope that makes sense. I think the biggest problem is, and I've said this before, but I want to make the point is that there's so much stuff on the chart, and if you don't really look at it anymore, it's lost on you. You're just looking at price and you don't really pay attention to what's going on in the background. But the thing is like pretty much every new car has a now heads up display, right? The heads up display is the blue tracers, the moving average, polling from the higher time frames and printing on your current execution chart to tell you where everything is. If you want to drop down to a 1 minute or 5 minute, then you need to multiply the moving averages to fit that time frame appropriately. If you want to pull from the higher time frames, if you want to look at 3 or 4 charts, that's okay. I look at 1 hour, 15 minute, and I try to get off on the 1 or the 5. That's it. All right, so let's talk about it. Let's see what it looks like. Okay, so start with the higher time frame and bring it into the lower. Okay, you can look at the 1 hour. 1 hour gives me directional bias. That's the easiest chart in the world to have an idea where price is going. Okay, level 1 on the 1 hour chart, you're going to get some kind of reversal, right? Level 2 is price is going to break and pull back, and that break is going to allow a chance for the moving averages to catch up and cross. So almost every time you're getting into level 2, you should have a moving average crossover. Okay, does that make sense? And then you're going to get level 3 is going to be a vertical market and a channel of the moving average and expansion. Right? Bill Williams calls that the gator. Price gator mouth, the moving averages open up. He has moving averages that print like a gator, like 3 or 4 of them. And they print a gator's mouth. I guess it would be 3 to make the mouth, right? The head and top jaw and bottom jaw. So similar, but you have to understand what you're looking at. So directional bias, you're looking at blue tracers, moving averages, and you draw your box tops, box bottoms, right? Looking for a box trade retest into a level. 15 minutes is going to give you the lead in and the setup, but it's not going to give you the trigger unless you're trading on that time frame. So you don't look at this stuff until it's time to trigger. Okay, you get your directional bias. You sit here and you wait for your lead in and your setup. What's going to be a lead in? Right? You look at the 1 hour chart, you have a sell side book in your mind or sell side. You're looking for a sideways print consolidation. And then the 15-minute chart is going to give you a 3 count, a reversal, a retest into the area. And then when you have that area mapped, then you drop down to your 5 minute or 1 minute. And that should put you in the spot. You understand? That's what you need. All right, so let's look at it. 1 hour directional bias. Draw in significant levels and globalize those levels. What the hell is globalize? You globalize the levels by putting them on every single time frame. You understand? That's how you do that. So you draw in significant levels and you globalize them to every single chart. If you got a 1 minute, 5 minute, 15, 1 hour, these levels need to show up on every single chart that you're using. Okay? Does that make sense? So moving average crossover. What am I looking for? How long ago did it cross? Did it cross yesterday? Did it cross today? We know what to expect. If it crosses, a retest higher. If it crossed yesterday, we expect some expansion, maybe a little interaction with the 50, but should stay off the 200. Right? Flips and counts. Okay, level 1, anchor formation. Level 2, crossover retest. Level 3, vertical expansion. That's how you tell where you're at. All off the 1 hour. Right? Vector high, vector low. Level 3 stuff, vertical. Don't chase vertical markets. And then day counts. What day am I at? Right? Looks like a day 2. What does day 2 tell us? Straightaway. Looking for straightaway trade. So we're going to be trading in some type of zone in Asia. Right? It's either going to be an AR 0 low. Maybe we got the open lining up with it, and we're going to draw a mini zone within the zone on the last 1/3 of the box and project those ideas out into space, right? Into forward space. All right, so that's what you're looking for. You walk in, you got your 1 hour directional bias, you're drawing your levels. Globalized levels means put them on every single time frame that you're going to use. 1 hour for me, 15 minute, 1 minute, or 5 minute, depends on how I feel. If I want to challenge myself, I try to get the best possible entry on a 1 minute. You know what I mean? All right, let's move on. So 1 hour chart, what do we got? This was a couple days ago. Vector to the low, pulls back, flat print. 200, can't get above. Possible retest here, right? If I want a W to build out, I need a retest into here, right? I'm rejecting higher price for hours. The book closes below, retraces. So rejecting higher price, they make a move towards the downside, take out the level, take out the levels. I'm liking this short going into London. Okay, so I mark all my stuff up, right? I'm going to draw top side level out into the future, right? And it's okay to pull yesterday's data, right? These swings, project it forward. Now I'm looking at open, right in the middle. That would be point of control right about there. So price below point of control, breaks below, retest into point of control with some bleed. That's a sell side. Price can't get above for hours and hours and hours, can't get above. I like it sell side. So two options are going to be stop hunt low, rise, or straight away down because it's pressing this level and can't get above. Or of course the final option, stop hunt high, M formation on the Mayo through the levels into lower price, and then maybe you have to decide here. So right off the top of my head, here's blue tracer, here's blue tracer, here's moving average. The trend is down. I already know where the daily levels are by dragging this over. Yesterday's high and low, right? Drag it over. The daily level is here. Sorry, disregard. The daily level is here, and the daily level is here. So this is what the candle did yesterday, right? Moving down, right? This one isn't pressing. This one's coming up a little bit. So the ADR or the range got tighter, right? This is down and this is up. So that just tells me what the daily's doing. You understand? Simple. All right. Hope you guys are doing good. So you draw all your levels on 1 hour chart, globalize them, only use significant levels. Major swing points, pressing in the book, stuff that's visible to you. Get into the level you want to deal from. Okay? So now, drop down on your lower time frames and focus on that area on the chart. When price gets into the zone, you have your setup. Drop down to the next lower time frame and repeat the process, right? You get your setup. You need a setup on the next lower time frame. So here's my 15-minute. I mark these levels out. I'm looking for a place to deal from. I know they're rejecting higher price. Rejecting higher price, right? This is yesterday pulling off of here. This is the full size candle in here, this, right? This swing, that swing. That looks just like the book press, right? Consolidation, price goes up, nope, can't have it. Comes back down. Price tries to go up, nope, not having it. Price tries to go up again, not having it. I want a deal from here. Okay, so I press these levels, I'm watching it develop. Here's my setup. Price moves up, consolidates. Price can't get higher. London open, a mild stop hunt higher, and then price turns over. Now you can get really precise on the 1 minute, right? Same levels, globalized over, right? You got 1, 2, 3. You either deal right from here or you deal from this pushback. Look at this little apex nadir he set up. Check it out. So you take this off of there. There's your M formation, right? There's 3 hits. It breaks below, pulls back. You could deal from here clean, or you could deal from here clean. And your stop is going to be about 5 pips on that. Same thing here. You get that break, and you get that M formation again. So you get major M, minor M, gone. And this was enough right here to be done. Then pull back for US. Notice what they did, man. So you would draw a level here. You could draw all these levels. You could draw a level here, stretch it out, okay? So they hit trapped high, trapped low, right? They'd hit the stops here. Took long holders, took the trade above here, tried to get long. They trapped lower level shorts, and then they went into sideways motion and ended the day trapped. People carry that over, right? You're stuck now. If you dealt in here, you're stuck. You want to find the major swing points or what the book would look like pressing, right? So don't you see that? You don't need that because I just drew that for you. That's what the Asian range does. The Asian range boxes this stuff up. But you have to be smarter than a blue box. You got to see what's going on. You got to look at the bigger picture. You got to aggregate these levels, take them. And if you're afraid to deal, you put one order here, one order here, and one order here. You would only got filled. On the 1 minute chart, they're very precise. So once they press below here, you could see they flipped the book downside, right? They pulled back, couldn't get above. So you would take, if you were trying to be very, very precise, you would take this next level. See the flat print right there in the top of these bars? You could literally cut this box in pieces. And you have a micro zone within a zone. Then you could take this leg right here and project it out like that, and then that would be your 2, your 1, 2. Same thing here. Okay, we know zone flip on a 1 minute chart. Pin, 1, 2. The micro M, you deal in the box right from here. Both very precise entries. Same thing essentially, right? There's your V, pullback. There's your V, pullback. There's your hook back, right? It's a little bleed there, but it repeats in the same lower level zone. This zone, right? It flipped when this finally flipped. This is a great entry too. You could deal from there. So you could essentially deal here or here. This would be one entry, second entry, or this would just be your primary entry. And that's okay. You're done in 10, 15 minutes, a couple of bars. All right. So the idea is to get the levels drawn in properly where the book is pressing, and it should look just like this in your mind. You'd be like, okay, man, they're squeezing price at the high. Squeezing price at the highs. What does that look like in Bookmap? What would that look like to me? It would look like an orange stripe sitting right here, right? And stretch out in time. Okay, and they press it lower and they can't get back above. What would that look like? Something like that coming off the bottom of these bodies. It would give you an orange stripe right here. Dip it, can't get it, reject it hard, can't get it, can't get it. So 3 hits to the high. M. Okay, I want confirmation. I'm going to wait for the apex nadir close. So you're looking for a setup within a setup. Does that make any sense? And a trigger within a trigger. This is fine. And you could deal off the 1 hour clean. But the thing is, you're not going to get as precise. You're going to get in maybe on a close here, and you're going to be so many pips off of that level. Right? This is this spot right here. This is the blow up of all these bar prints. Make sense? All right, and then you're getting into very precise levels, right, with the book. So you take these wicks and a little bit of the bodies and you aggregate or extend it out into the future. Sure enough, it flips tests, re-hits it again. You'd have a little bleed if you boxed in here. But it's 1 minute chart. It's micro. It's nothing. 3 pips, 2 pips. So you're looking to deal here, stop here. Do the math. Very, very little. By the way, on these charts, these boxes are 15 pips. Each one from this grid line to this grid line. If you have a grid on your chart and don't know what it is, shame on you. All right, one more, I'm going to wrap it up. All right, work with me. What do you got? Okay, outside vector to the low. Here's significant highs. Significant highs. Okay, price goes in, anchor, forms an M. All right, so we would take this. That would be your entry area right there on the chart. So now we want to, okay, so lead in. Setup is going to be the lower time frame, right? Same thing. Looking like a fake W. Going to draw the levels in, and we're going to get a rejection here, right? This hammer failed to get into the level, but if you have a limit order, you're in right here. Like to say I got it, you know, right on the last bar of this bullshit. You get the rejection there, you get filled. Stop goes there. Got a nice move. Retest, flips the book. There's the flip, clean, and you're done here. All right, same thing. Drill down to the 1 minute. All right. I appreciate you guys stopping by. I will see you next week. Good luck, good trading. Send me your process, man, so we can go over some other people's stuff and see what other guys are thinking, and we can help you accumulate some data and information to formulate your own. Good night.